Tesla CEO Elon Musk recently revealed when Tesla stock will reach and most likely surpass $2,500. Several target prices have been set by analysts over time, but there's one in particular Musk claims to agree with. Cathie Wood of ARK Invest has revised her previous target price of Tesla stock and predicted a 350% increase to $3,000 in just 5 years, and Musk has been said to concur with this. So what are the details of ARK Invest's new predictions? And why does Musk agree? How feasible is this target price? These are the questions we'll be answering in today's video, so be sure to keep watching. Tesla CEO Elon Musk has mentioned several times that he believes the stock price of Tesla Incorporated is way too high. Last year, however, investment company ARK Invest released a note saying their Tesla-based stock price target is $3,000 by 2025. ARK Invest estimates that Tesla will produce between 5 and 10 million vehicles by 2025 based on its valuation models. The company's also banking on Tesla producing a fully autonomous ride-hailing network, dubbed Tesla Network, that will generate a lot of revenue with a high profit margin. Elon Musk discussed ARK's revised $3,000 pricing target with Tesla staff in an email acquired by Electrek, saying, "I agree with ARK Invest. If we execute really well," Musk remarked. They seem to be on a path to stellar execution, but can they achieve a stock share price of $2,500 in just 3 years? Tesla revealed great vehicle manufacturing and delivery numbers earlier this year, which makes us inclined to think it's possible. The company outperformed census delivery forecasts by 16%. However, due to a general market sell-off, the company's stock price plummeted after the bombshell news. We believe the business can still outperform the market. As we move forward into 2022 and beyond, the company should continue to climb higher and deliver better than expected results. Musk's agreement comes as a surprise because this is a different stance from which he had taken previously. In May 2020, Musk made a controversial tweet saying, "Tesla stock is too high in my opinion." The company had recently announced a solid quarter a few days prior, pushing shares higher. Just before Musk tweeted, Tesla stock was trading at $760.23, then plummeting to a session low of $717.64 before plummeting even further. Musk has come a long way from the mindset of the stock price being too high, it seems, and we think this is due to the previous success of 2021. Amid production crises around the world, Tesla made history last year, levels of growth to which many analysts didn't see coming. In just 12 trading days, the worth of a modest participant in the traditionally grueling, heavy metal bending market was increased by roughly $400 billion by the world's investors. Tesla allegedly has the largest dollar increase in market cap in the history of equities in such a short time. Tesla's stock soared after the company reported solid third-quarter profits. Its market capitalization surpassed $1 trillion for the first time days later. Then, news of a deal to sell 100,000 electric vehicles to Hertz pushed the stock to a one-day increase of 13% to $1,025 per share. Tesla's market value increased by nearly $392 billion in a week and 2 working days, from $818 billion to $1.21 trillion. This made several investors revise their evaluation of Tesla, especially the people betting against the brand. The case was the reverse for early investors as they had a field day. In the booming bull market for IT and social media over the past year, the 4 prior members of the $1 trillion club, which Tesla had then joined, also experienced big, sudden jumps in market valuation. Even though Apple, Microsoft, Amazon, and Alphabet all started at valuations of over $1 trillion a year ago, far higher than Tesla when it began its early $400 billion rampage, none of their spikes matched Tesla's. Keep in mind that we're talking about a company that is 1/4 the size of Microsoft, less than 1/5 the size of Alphabet, 1/8 the size of Apple, and 1/10 the size of Amazon in terms of revenue. Regardless of the current decline in Tesla stocks, many investors still hold the belief that there's a bright future for the brand. Looking at the year-over-year growth in Tesla deliveries, we're inclined to agree. Tesla deliveries have increased by more than 1,100% in the last 5 years, which is remarkable if you think about it. Given the company's prior performance and projected quick growth, we could expect significant delivery increases in the coming years. As a result, the stock price of Tesla should continue to rise as the firm progresses, making ARK's forecasts seem feasible. Gene Munster, managing partner at Loop Funds, is a Tesla bull who also believes the EV giant stock will continue to thrive. He agrees with the note by ARK Invest saying that Tesla shares are worth $2,500 in the long run. According to the analyst, one basis of his stance is the fact that the company has also ventured into energy, autonomy, vertical takeoff and landing, and robots. We agree that this diversity is very promising, and since they're rooted in futuristic pursuits, Tesla stock will definitely benefit from this. According to the expert, the stock's direction over this year cannot be predicted. He noted that Loop's long-term valuation argument is based on 6 times revenue in 5 years. According to Munster, Tesla's revenue would likely increase from $70 billion in 2022 to $400 billion in 2027. According to the analyst, a 6 times multiple on 2027 revenue gives it a $2,500 stock. This is a slight variation from the note Elon Musk agreed with, which was from ARK Invest. In ARK Invest's report, the Cathie Wood-run firm predicts a 350% increase and more than double ARK's own $1,400 price estimate from last year. This means they believe the company is set to hit $2,500 per share in less than 5 years, as opposed to 7 years postulated by Loop Funds. The report also said that even in the worst-case bear scenario, ARK believes Tesla shares will hit an absolute bottom of $1,500 in 2025. The algorithmic forecasting of Wallet Investor is equally positive about the company's prospects, predicting rapid growth in the near future. It claims the stock is an excellent long-term 1-year investment, with a price goal of $1,270 in the next year, while the Tesla stock price might reach $2,948 in 5 years, according to the company's 5-year estimate, validating ARK and Loop's forecast. Many analysts disagree with Musk on the stock ever getting to $2,500, claiming the share price is already grossly overvalued at its current $790 price. But Tesla has a track record of beating analyst expectations in previous quarters. In the last 4 quarters, the company has outperformed consensus estimates by an average of 14%, and we believe this trend will continue. Tesla's expected to outperform delivery projections in the near future, according to the analyst. According to Munster, Tesla would likely beat consensus projections of 1.2 million deliveries in 2022, finishing the year with 1.2 to 1.3 million vehicles. Last quarter, Tesla shipped 308,600 total vehicles, a staggering 72% increase over the previous year. The overall number of automobiles in this report far exceeded the census estimate of 267,000. Tesla's fantastic results imply that demand for its automobiles remains highly healthy. Furthermore, the company's production capacity is expanding, meaning that Tesla's revenue should increase significantly in the next few years. But can the company effectively execute towards this goal, as Musk mentioned? This seems to be what Musk believes to be the #1 factor in achieving the target price set by ARK Invest. We believe they can. So far, so good. It's been a rough year for the brand, but almost every automaker has had a difficult year. With the first quarter earnings call approaching next month, we'll know for sure if they indeed are on track to hitting the $2,500 price target. While we believe the company is capable of earning close to $30 per share at a stock price of $2,500 by 2025 based on predictions, the company is currently far from that level. As a result, there's a chance Tesla won't achieve that kind of earnings growth we expect. A slowdown in demand, more competition, supply concerns, decreased growth, and other variables are all risks that may deter the brand from reaching this goal in 2025. Serious concerns based on market sentiment might force Tesla's valuation to plummet, and the company's stock price could even reverse if serious problems surface. When do you think Tesla will hit a stock price of $2,500, if ever? Do you think the stock price will go higher or lower over the years? Comment down below.